Gotta be quiet, he's sleeping. Hold on to your ovaries, guys, because this little one is pretty fucking cute. Now, when you bring a child into the world, your mind starts doing a few weird loops. And you got to start thinking about, like, whether we're going to leave the planet in a good situation, how he's going to do when we grow up. And I suppose we should be a little bit more ethical with our investments to leave the world in a better place. Right, sack that off. Let's talk about oil. I've had a lot of requests recently to revisit oil and Royal Dutch Shell because it's not looking good. So I want to address it, and I want to explain why we need to get out of oil. I own Royal Dutch Shell, which is one of the big oil majors, and it's doing pretty terribly. The only time I want to see a graph like this is on MyFitnessPal, and right now, even that's going in the wrong direction. I think I'm going to do a diet bet soon and try and lose a bit of timber, man. Baby weight and shit. But oil majors haven't just failed to recover during this crash, they've completely lost the plot. Oil ETFs are massively underperforming clean energy ETFs. The gap's ridiculous. But we need to figure out if these prices are justified or if there's going to be something that brings the two together over the next few years. The current oil crisis started somewhere around January. Saudi Arabia and Russia decided to throw their toys out the pram and try and dislodge the US oil market. The plan was that Saudi Arabia would ramp up oil production, creating more supply and less demand. Saudi Arabia knows that US companies need a high oil price in order to operate. By ramping up the supply, they create lower prices. But that backfired massively when COVID hit. And the question we have to ask ourselves now is this permanent? And the first thing that you have to remember with the energy sector is that it's totally cyclical. Every few years, the price of oil will dip massively and then completely recover. I'm not saying for sure oil stocks are going to return to an all-time high, but I don't think this is a permanently massive drag downward. Every few years, there's terrible news about fossil fuels running out. I think I even remember in school they told me that coal was going to run out in 2010 or something. Does anyone else remember that? And even in 2003, Swedish scientists said it would run out by 2010. So situations like this aren't new to oil. But is this time different? As you expect, oil websites are pretty bullish on oil right now. And when we talk about oil companies and whether they're going to survive, we like to focus on this number, the break-even price. And as we can see, most countries require oil to be at around $50 to $60 to break even. And as of today, WTI is $36. So a lot of work needs to be done by big companies if they're even just going to survive. Oil prices have been really high historically, and oil companies have just got a bit too used to that. That meant that operating costs could just stay really high, debt could be allowed to go out of control, and dividends could be massive. And one of the biggest financial news items of 2020 was that Shell slashed its dividend. And it needed to do this because its pre-COVID break-even price was $51. And with that big dividend cut, they reckon it might have brought it down to about $36. So right now today, on oil, Shell might just be breaking even. And the plan is that by 2023, we could have oil back to closer to $50 a barrel. And of course, Shell wasn't the only one that needed to change. BP responded by cutting its dividend, and Exxon, I don't know what Exxon's doing. But Exxon currently needs $74 a barrel to break even. It doesn't seem to be responding to this crisis at all. And I think the best break-even price that I could find within a proper oil major was from Equinor at $27. Saudi Aramco, which is the most valuable business in the world, can apparently run at $27 as well, but no one can really believe that at the minute. So oil is having a really bad time. And I'm in Shell, and I've got a lot of unrealized losses from it. And Shell's third quarter results were okay. They beat their estimates and everything. And there was a great headline that they've increased their dividend. But the most interesting thing was their presentation.
Today, we present the third quarter results, and we want to give you an update on our strategic direction ahead of our strategy day in February.
Okay, first can we talk about Ben's jeans to shoe ratio right here? Yep, there's way too much jean to shoe on there. What's going on? I mean, don't get me wrong, his jeans are probably worth more than my house.
And lastly, I will give you a more detailed update on our businesses and how our strategic direction translates in our portfolio choices and our ability to thrive in the energy transition. We have a competitive portfolio with a solid track record on cash generation, which is absolutely leading our peer group.
Okay, so what we need to remember here is this is a highly biased presentation. I get that. I'm not here to just listen to him. But it's true, Shell generates a ton of cash, probably more than any other oil major. If we take a look at that free cash flow, everything is cratering at the moment, as expected, but their price to free cash flow is sat at a 15. You can look at Exxon, which is far, far more overvalued, and in fact they have a payout ratio of 2,600%. BP, in my opinion, is in a pretty sad state of affairs. It's really pushing itself to be a green company right now, but I don't think it has the revenues to pull it off. And then finally we've got Equinor, which is probably in the best situation out of all of the oil companies right now. So Shell is actually in a good financial position when you compare it to the other businesses in oil. But every single one of them relies on oil prices rebounding back to normal. The bullish oil investors want you to look at graphs like this, where petroleum still makes up a massive amount of US energy consumption. Or graphs like this one where it shows India and China are going to be massive oil consumers by 2030. And everyone's waiting for airlines to start flying again and ships to start moving again, thinking that will save them. But when we come to look at how oil is actually distributed, aviation only makes up 9% of what we use. The vast majority, almost 50%, comes from road transport. And has anyone heard of any changes in road transport recently? Nah, can't think of anything. There are some pretty scary graphs out there that show by 2025, 80% of all vehicle sales could be electric. But the general consensus is that by 2040, internal combustion engine usage will be cut in half. No prizes for guessing what that does to this slice. This is the most likely scenario. Oil majors agree on this, and even Elon Musk agrees on this as well. So it's time to make a change. And it looks like the European oil companies are starting to figure that out.
We aim to be a net zero emissions energy business by 2050 or sooner. We will do this in step with society, and we will do so by working with others. And yes, our business plans will have to change over time. And with this end goal in mind, we have set our strategy to deliver value today and value tomorrow. So this is how our strategy translates to each one of our businesses. As you can see on the slide, we like to think of Shell as 3 types of businesses.
So Shell is attempting to transform its business into a cleaner, greener business. It wants to do this by taking its existing oil profits, investing that into liquid natural gas, which is likely to make a lot of money in the medium term while we transfer over our energy sources to renewables, and eventually use those profits to invest in renewable energy. And not just renewable energy generation, they want to get into delivery. Shell's global oil business is located in 19 locations around the world, and it wants to reduce that to 9 locations. Most notably, I think it's going to try and sell everything in North America. The problem with this is we've heard it before. Shell's been on this green energy bashing thing for a long time, and so have other oil majors. But so far, no one's really done anything significant. Shell puts a tiny amount of money into renewable energy, and this is because it's not been part of Shell's plan to actually put any money into it yet. In fact, 2020 is the first year that Shell is actually supposed to start putting money into renewable energy. And going forward, Shell already had a plan in place to start bashing in some real money. Equinor are the only other company that are showing any promise of putting money into renewables. It's really annoying because Shell haven't started any real major renewable projects. Looking at their major projects section on their website, not one of them is renewable. Fair enough, some of them are liquid natural gas, which is the plan. Shell look like they're probably going to hop from oil to gas to renewable. That's how they're going to do it. But it could be too little too late. They're banking pretty highly on LNG, saying that it'll keep growing until 2050. That the world is going to need LNG to support wind and solar to prevent blackouts or something. So if liquid natural gas is the transition to renewables, what does the final growth business look like?
The energy transition is bringing major change, and our customers too are changing their preferences. This is true of mobility, and it's also true of demand for convenience. Both these major trends provide opportunities for our marketing business. And our position here is also very strong. We have more retail sites than our competitors, and we serve more than 30 million customers every day across around 80 markets, providing fuels, lubricants, electric vehicle charging points, food, and even groceries.
Now this bit I didn't like, this marketing platform. He made it sound like Shell wants to eventually become a supermarket by selling food to people. Electric charging on the go isn't going to happen. We as a society are going to change the way we charge our cars. We're going to treat them like our mobile phones. We'll charge them up overnight or when we're at home, and we won't really need to charge them while we're on the go. So I can't understand how having as many petrol stations as there are McDonald's is going to benefit them massively as drilling oil is.
We are not starting from scratch in power. We have unique customer access. We serve millions of customers every day, which gives us insights and in-house expertise in understanding customers' needs and wants. And we have solid trading and optimization capabilities and scale that we have built up over decades, which are central to our ability to understand markets and optimize value chains. We are already one of the largest power wholesalers in North America. And as to our positions in renewable power generation, well, I can tell you we will be selective and we will enhance returns through dilution and competitive financing. Enhance returns through dilution and competitive financing.
I made this video on the 29th of October, the day this presentation came out. But since then, WTI and Brent crude prices have gone up quite quickly. They're almost pushing $50 these days. And in response to that, Shell has done very well as well. But is it here to stay? I think I'm going to try something new and go outside for this last bit. So this is where Shell sees the future of its business. It owns about 50% of these refueling stations. It's going to refinance, divest, and then deliver hydrogen and fuel to different customers who need it. They're going to do it through these stations, and they're going to do it through their new energies business. I'm not so sure though that the future of Europe's biggest oil business should end up being a supermarket though. I just think there's more to it than that. All the details earlier with their cash flows and their high debt, that's all real. But from that point to this point, it's all speculative. And I don't like getting into speculation. Everything I said at the start of this video is still true though. Shell generates ridiculous cash flows and is going to be very specific about its investments. It's going to be very specific about which renewable companies it gets into. Shell's recovery has led me to sell a lot of shares. I haven't sold out completely, but I've reduced my risk. Shell was my biggest position and I was so overly exposed to it, but now I've reduced it down. And for now I'll be waiting until February to figure out what the next step is. If they can prove in February that there's a proper strategy going and there's a good step-by-step plan to achieving these goals, it may make me invest more. But for now I'm going to lower my risk. I think I've done enough embarrassment for the day. I'm going to head in and probably finish this one inside. It's really cold too. Thanks for staying with me with the poor sound quality there. I thought I should try something a little bit different today. It's pretty embarrassing to do, let me tell you that. But I want to make this channel a bit more interesting, so I'm going to try these new things. The point that I was trying to make was that major oil companies are going to be part of this energy transition. We just don't know how big of a part they're going to play. But they're the biggest part of the energy sector, and they have the most money. So why are so many people doubting that they're not going to come out the other side? They probably are. The real problem is we can't accurately predict how profitable the future energy is going to be. They have all of the cash and they have a lot of customer contact. I think it's going to be up to them to decide how much of a part of that they're going to be. Thank you very much for watching, everyone. I know that video's been a bit disjointed at the end. I'm just trying a few new things. The investment app I use is called Trading 212. If you want to get into investing, you can sign up through a link in the description below. If you sign up through that link, you can get a free share that's worth up to £100. Don't forget to check out the free Discord. Don't forget to check out Instagram. I think that's all I've got left to say. And if you enjoyed this video, please feel free to like, subscribe, and invest.
I don't do that very often, but I've got to get one of those thumbnail pictures things. You know, where everyone looks shocked and shit. That. Say something. Say something. No. Bit camera shy. Alright. Oh, fucking average. Welcome back, everyone. Today we're going to talk about oil. Don't find that funny, do you? Come on then, let's get you in.
Sack that off. Let's talk about oil. Ah, oh, shit, I was looking in the wrong direction. I'm going to get this doll baby back into a similar spot. Let's sack that off. Let's talk about oil. That was shit.